Sir, welcome, sir.
Welcome, sir.
Sir, நல்லா இருக்கும் sir.
Okay.
Madam, very good evening, madam. Madam, good evening, madam. Yes, madam.
Yeah, am I audible now? Hello, am I audible now?
Yes, ma'am. Yes, ma'am.
Yes, ma'am, you're audible.
Meeting
A very good evening to one and all. Let us all. Am I audible?
Yes,
Gayatri, you're audible.
Thank you. A very good evening. Let us all be proud of our beloved nation. We all have to collectively strive to make India vibrant, strong, and supreme. Zentax Cleaning, celebrating the 76th Independence Day with 76 minutes live virtual session, commencing the first day of 5 days GST Marathon. I extend a warm welcome to everyone present here. The right information brings knowledge, and knowledge is power. Sharing it is empowerment. The aim of this GST Marathon is to create a shared group experience for understanding the updates with latest changes in goods and service tax law. In this regard, we express our gratitude and thank you for taking part in this marathon and be well versed with the changes in GST. We welcome you all to the day 1 of 5 days GST Marathon session. It is our honor to introduce our special guest, Mr. Tirunyanam, the President of Codicia for the years 2022 to 24. We invite you to the gathering, sir. Kindly welcome the gathering.
Very good evening to all of you.
Good evening, sir. Good evening, sir.
Yeah, on behalf of Codicia, SEMA, and Zentax, I welcome today's chief guest, Ma'am Srimati V.K. Vamsathara, ARS, Additional Commissioner, CGST Coimbatore. Madam, you are welcome, madam.
Thank you.
And we also welcome all the participants of today's 76th Independence Day GST Marathon session. This is going to happen for another 5 days and for 76 minutes. In this good occasion, on behalf of Odisha, I would like to say a few words that since the introduction of GST, Odisha has organized lot many programs on GST subject because in the beginning, there were many confusions and learning things has to be from the government side and also from the industry side. So at that point of time and till today, we had got a very good support from government side, GST officials. Till today, we have been interacting with them and we got information each and every aspects of GST whenever the new with regard to taxation changes or whatever it is, or any notifications with regard to GST, we used to interact with all the officials and we disseminate the information to all our members immediately. And so because of this exercise, till today, we were able to spread the complete knowledge about GST to all our members. And till today, it is going very, very fine. And thanks to the officials of the GST officials of Coimbatore. And meanwhile, we should like to we like to thank Mr. Paul Tangam and Arvind Tangam because we have been associating with them for many years. So from them also, we got a lot of ideas with regard to how to move about, how to educate ourselves and our members till today. So once again, I welcome everyone who are participating in this program, and I hope all the participants will get all the 5-day session will be you get a very knowledgeable session, I hope. And once again, I welcome everyone for today's first day of this marathon session on GST. Thank you very much.
Thank you, sir. Thank you, sir. Good evening to all. First,
Good evening, sir.
thanks to Odisha President sir, Tingam sir, very thanks sir for this taking this initiative. And then Action Commissioner Madam, it is very honored for us to have you as the chief guest for this event. And then this is as there is a change in the many aspects of the GST after the 47th GST Council meeting. Change is the only thing that is permanent. Many changes have taken place after this 47th GST Council meeting. Some of the things are very crucial and then very important for the industry as a whole. Some of them will be affecting only few industries and others will be affecting all the industries. In this regard, we thought it has to be communicated to the industry in proper manner. For this, the Odisha took the initiative associated with SEMA. Both these associations are having a sizable numbers in Coimbatore, and then their members are also needing the support, everything. For this purpose only, this program has been organized. This has been taken into consideration, all the practical issues that will be coming into that, so that we are covering in 5 days. Because if it is going to be given in 1 day, then they will not be able to understand or they will not be able to take it to the home. So there is going to be 5 days program. First day, that is today, this is with regard to GST 3B. GST 3B, the method of communication. See, the return is the first document where we communicate to the department. So this communication happens through 3B. So this is a basic document. On the basis of that only, department initiates a further action. So how we are going to give the details in this form is very crucial. So this change, though the amount of tax payable is not going to change, the way in which we are going to give the details in this form has gone a tremendous change. So this is a thing, all the persons who are going to file the return in GST 3B has to take into consideration while filing the return for the month of July. So this is very crucial. Then GST rates. So for getting over the inverted tax structure, many initiatives have been taken. So the rate rationalization has been taken. So that is also taking into in one more aspect. Then eligibility of ITC. ITC is the basis of contention between the department and the assessee always. So what is the items which for which the ITC can be taken? What are the items for which the ITC cannot be taken? This is going to be dealt with in detail. And also another contentious issue is what are the amount that are collected from the employees. For employees, canteen amount will be recovered, and then leave encashment or the notice pay, all these recoveries. What are the implications in GST? We have to applaud the department for giving detailed circulars in this regard. Very, very detailed circulars have been given recently to clarify all these aspects. As everyone will be aware of the fact, the circulars issued by the department are binding on the department. So this will be very, very useful for the person dealing with GST to know these circulars, and then they go according to the circulars to avoid any further proceedings. Then e-invoice, e-way bill, these are also practical issue. Then departmental audit. So what are the areas where we have to be departmental audit? Then how it has to be replied, and then what are the cooperation that has to be given to the department to carry out the audit smoothly. These are the issues that are going to be taken up in this all these coming days. And once again, I thank the Codicia President and then Seema and then Madam for gracing this occasion. Thanks, one and all. Now the floor is open to the Chief Guest. Madam, this is for you, Madam.
MC. Okay, so our MC will introduce the Chief Guest.
Our MC will introduce the Chief Guest.
It is indeed a privilege for me to introduce the Chief Guest of the Day, Additional Commissioner of CGST Coimbatore, IRS Srimati V.K. Vamshatara. Thank you, ma'am. Thank you for your esteemed presence. We would like to hear a few words from you, ma'am.
Thank you. Good evening to everybody here. Am I audible?
Yes, madam. Yes, madam. Good evening, madam.
Good evening, dear respected President Codicia, Seema members and Codicia members, Paul and Arvind Tangam. I'm really glad that you have invited me to this marathon session that you organized in light of the 76th Independence Day also. So the Independence Day is coming. So joining GST with the Independence Day is very new, very different. So wishes to you on organizing a new initiative like this. I would like to say that GST feels like it's very new, but it's been already 5 years. It looks like it was just started in 2017, but already 5 years have passed. And if you see the growth, we all know GST has like changed so many ways, so many things, so many laws, so many returns, so many filing. Everything has changed from day one when it was introduced in 2017 to if you see it now, there has been a lot of changes that has been constantly being done. These changes have happened because the department, the government has been considerate towards the taxpayers at each stage from the beginning when GST was introduced and when migration was happening between the erstwhile laws and present GST. From then till today, I think the department has been hearing the problems of the taxpayers. They have taken into consideration the issues in be it return filing, registration, refund, clarification and rates. In every sphere, I think the GST Council, the department has heard the taxpayers. I wouldn't say that we've reached the best point of GST. I think the revenue has been a indicator of how successful this law has been. From just 90 crores, we have now reached 1.4 lakh crores on a month-to-month basis. I think we've reached despite the slowdown from COVID. So I would say that GST has been a success in this country, but it is not the end. There will be more changes because there are still challenges. We are still having a lot of issues with regard to different rates for different items. We still have 5 rate structure. It is still not a one single rate. we still have issues in infrastructure. We still have little detailed return filing processes. But still, I think the government has tried its best to accommodate all, from large, very large taxpayers to even the smallest taxpayer. I think the government has been considerate in taking their issues. In that regard, I would actually like to appreciate associations like Odisha and SEMA, who have been very instrumental in taking up these issues of the small taxpayers. We all know that Coimbatore is a more of medium and small taxpayers. In that way, I think Odisha and has been a forerunner in taking up these issues with the GST Council, and many of these issues have been resolved also. I hope they continue doing this good work in the future also. We are all open, we're always here. Whatever issues are there, we are ready to take it up for you at the highest level. Whatever possible that could be done from our end, we will be doing. So with regards to the topic today, I think all the technical issues of whatever the changes are, I think that will be taken up by the faculty whoever is going to take classes here. I think I don't want to waste any more time so that we can start this session. So I would like to thank Paul and Arvind for having invited me to this event. I hope to be a part of more such sessions in the future, because like I said again, the changes are so many and the trade needs to be kept updated at a very frequent number of times. You know, the changes are so many. So I hope that you keep this good work in a constant, if this good work keeps getting done constantly in the future also. Thank you.
Thank you, ma'am.
Thank you, madam. Thank you, madam. Thank you, madam.
Thank you, ma'am, for your wise words. We look forward to your continued guidance and support. We like to call upon CAP Aravind Tangam, CEO of Tax Clinic, to begin with the technical session of the day. Participants shall post their questions in the chat box. The questions shall be considered at the end of the session.
So at the outset, a very good evening to one and all present here. It is extremely a pleasure and privilege to be amongst you all to discuss at the first day of this 5-day marathon session, jointly being hosted along with Odisha and SEMA. So as the chief guest of the day, Srimati Vamsadhara, Additional Commissioner of CGST, rightly pointed out, there has been a good number of changes on almost most of the aspects in the GST law during this period of 5 years. The initial period of 5 years have been very crucial and have been very exciting. The government has taken into account the very many requests of the trade and industry, including the very active associations of Odisha and SEMA, and those have really resulted in a lot of positive change for the various members of the trade and industry. And as Father rightly pointed out, change is the only thing constant. Matram undre maradadu. So, as Madam said, in the Matram undre maradadu, Appa sonnadum, Madam sonnadu first 5 years appdi sollumbodhu, what I can recollect is Aindil valayadadu, Aimbadil valayadu. So the first 5 years are like the formative years of a child, and which have been extremely very crucial for the development of GST. And in these 5 years, the government has crucially and rightly implemented or brought about the right and the required number of changes in the GST law. So the most and the crucial important aspect has been with respect to the change in GSTR 3B. Right? So the topic for today's day one discussion would be about this new form GSTR 3B, the interest calculation under GST, and the GST on recovery / retention of amount, on cancellation of contracts. Right? So the agenda would be, with respect to 3B, there are two important aspects that are to be understood. One is the GSTR 3B, which has been notified through an amendment in the CGST rules, and thereupon there is also a concept paper on a new GSTR 3B, which has been laid open to the public for comments. Both these aspects would be very important aspects of the discussion, followed by the interest calculation under GST, thereupon the GST on amount recovered. Then we will have a question and answer session. As rightly pointed out by the admin, if there are any questions, you can post it now in the chat box, which should be thereupon taken in the later part of the discussions. So what is the new GSTR 3B? So the old GSTR 3B, the most important change in this GSTR 3B is with respect to the amount of eligible ITC that is being reflected in GSTR 3B. The amount of ITC is being shown in table number 4. So this is the table number 4 as it exists as is today. We have table number 4 consisting of 4A, B, C and D. 4D, 4 Delhi, having capturing the details of only informational purposes. 4A and B subtracted, the net figure captured as 4C, which is taken to the electronic credit ledger of the specific assessee. So we are well accustomed to GSTR 3B, thanks to the experience of having filed the GSTR 3B for almost more than 5 years. GSTR 3B, when it was originally brought in, was only a temporary form which was brought in when GSTR 1 and GSTR 2 filing was not actually enabled. We should actually rewind to the time of July 2017, when GSTR 1 and GSTR 2 were not actually available for filing, and for immediate payment of such amount, the government had notified GSTR 3B. And the government really tried to implement GSTR 1, 2. Government also tried to introduce new forms, but GSTR 3B stood its ground. Now, government has taken a very good stand to say that GSTR 3B will continue, but with some small minor changes. So these changes has to be well understood. How do we reflect the ITC in GSTR 3B now? Say the details in 4A, 1, 2, 3 and 4 are all details relating to import of ITC, import of goods, import of services, say inward supplies on which ITC is claimed based on reverse charge invoices, ITC based on ISD invoices, that is input service distributor. But the most crucial and the common field in which we fill input tax credit is all other ITC field, the field 4A5. So how do we calculate the amount of eligible ITC to be filled in 4A5? Take for example, the total eligible ITC as per books is rupees 5 lakhs. Out of this eligible ITC, we will compare this eligible ITC with GSTR 2B and say, out of this 5 lakhs, say 50,000 rupees of invoices is not reflected in GSTR 2B. Then, in such a situation, it is a general situation that this 4,50,000 rupees, which is the difference between 5 lakhs and 50,000, this 4,50,000 rupees will be shown in all other ITC in GSTR 3B. The amount of blocked credits, which is actually an ineligible credit, is generally treated as an expenditure in the profit and loss account and generally not shown separately in GSTR 3B. Because for the assessee, the eligible ITC has to be shown, and that amount of 4,50,000 rupees, which is a new compliance of law, is shown under all other ITC. Now, what happens in GSTR 3B between the old and the new? There is no change in the fields between 4A, 1, 2, 3 and 4. That is import of goods, import of services, inward supplies liable to reverse charge and inward supplies from ISD. There is no change on these 4 aspects. The change happens only from 4A5. So there is the same field, all other ITC, but the value that is to be entered in this change in this field undergoes a change. What is in 4B1 and 4B2, 4 Bombay 1 and 4 Bombay 2 has got amended, and thereupon the other fields also gets changed. So what is the comparison between the old and the new form? So the left column is the old form and the right column is the new form. So in 4 Bombay 1, we had the description as per rules 42 and 43 of the CGST rules. Now, under the new form of GSTR 3B under 4 Bombay 1, we have as per rules 38, 42 and 43 of the CGST rules. and subsection 5 of section 17. So that is a very important inclusion of section 17(5) in 4 Bombay 1. 4 Bombay 2 retains the same terminology as others. 4 Delhi, that is the D clause, which had the caption as ineligible ITC, has now been changed with the caption as other details. It has to be well understood that this D column, this Delhi column, though is being filled, is not taken into account for calculation, and it is only for informational purposes. Earlier, and it also continues in the new form. The values filled in the column of D continues to be only for information purposes and is not taken into account for calculation of eligible ITC. So what this transfer to electronic credit ledger is the amount which is reflected in 4C, which is the difference between 4A and 4B. So people are not filling 4D with a lot of significance. But now this table 4D gets utmost significance in this new format of GSTR 3B. So what is to be filled in 4A5 undergoes a change. What is in 4B1, 2 and 4D1 and 2 also undergoes a change. So what is this 4D1? Let us understand what is to be filled in 4 Bombay 1. So that is something which is very important. So it has to capture the details of ITC which is to be permanently reversed. There is a terminology which is used in the circular, which is given for explaining the changes in this form GSTR 3B. This circular very clearly mentions that permanent reversal of ITC ought to be shown in 4 Bombay 1. So this permanent reversal arises due to Rule 38, 42, 43 or Section 17(5). We will discuss more about these permanent reversal in the coming slides. Then 4 Bombay 2, which talks about other reversal, captures the details of temporary reversal. So temporary reversal will capture the details of goods or invoices which are not received or transactions in respect of which payment is not made to the supplier within 180 days. Why is this transaction coming into the GSTR 3B? Generally, we will not capture this detail in GSTR 3B at all, at least very particularly with respect to goods or invoices which are not received. This change is because of this change in 4A5. These details in 4A5 were being filled based on books. The general thumb rule for filling GSTR 3B was only based on the books of the assessee. Now, there is a very significant change to say that 4A5, that is all other ITC, has to capture the entire details of ITC as per GSTR 2B. The total ITC as per GSTR 2B will be shown as such in 4A5. So there is something to be added additionally, which I have shown in the slide, which I will explain thereupon. But the first and crucial important aspect is the entire GSTR 2B ITC has to be entirely captured in 4A5. And once the entire 2B ITC is shown, out of this GSTR 2B ITC, there will be some permanent reversal. Say, for example, in your GSTR 2B, there is ITC on purchase of car. Car, which is a vehicle for transportation of passengers having seating capacity less than 13 passengers, is a blocked credit under the provisions of Section 17(5). Therefore, we will fill the details of total GSTR 2B ITC in 4A5 and the ineligible ITC on blocked credit, that is ITC on car, will be filled in 4 Bombay 1. And suppose in GSTR 2B, there is an invoice which is getting reflected. That particular invoice is not received by the assessee during the respective month, or the goods are not received during the respective month. In such a situation, then that transaction has to be reduced in 4 Bombay 2, 4B2. So what is something which is very important and crucial to understand is the starting point hitherto, that is the existing GSTR 3B, which we have been filing since July 2017, has been the books of the SSC. That is the starting point is based on books. But now the starting point for GSTR 3B ITC is GSTR 2B. So you will take the entire ITC as per GSTR 2B and then reduce what is permanent reversal, what is temporary reversal, and then arrive at what is the eligible ITC. Right? So this temporary reversal captures the details of transactions in respect of which goods or invoices are not received. Say for example, an invoice by X supplier is reflected in GSTR 2B for the month of July. The goods are not received in the month of July. In such a situation, the ITC reversal will be shown in the month of July in temporary reversal. And thereupon, in the next month, in the month of August, when the goods are being received, this temporary reversal has to be reclaimed. Is becoming eligible in the month of August because it got reflected in 2B in the month of July. Goods have been received in the month of August. So that becomes eligible out of the temporary reversal. This amount which becomes eligible out of the temporary reversal is added to 4A5. That is the total ITC as per GSTR 2B. So whatever that is coming in GSTR 2B will be shown and then an additional amount will be added. That is out of the amount which was already reversed in any of the preceding months. So if you have shown any reversal in the preceding month in 4 Bombay 2, it becomes eligible in this month. That amount will be added in 4A5. Whatever is the amount that is being added in this 4A5 has to be shown in 4 Delhi 1. So I take the total ITC as per 2B, I add something, then that will be shown in 4 Delhi 1. 4 Delhi 2 will capture the details of ineligible ITC, which is already shown in GSTR 2B. If you have already seen GSTR 2B very carefully, you would be able to note that there are some transactions which are already shown on which ITC is marked as ineligible. The ITC is marked as ineligible in GSTR 2B due to 2 reasons. Number 1, where the place of supply provisions are different. Say for example, an assessee registered in the state of Tamil Nadu. He takes the service of lodging services in the state of Delhi. The Delhi lodge would have given a CGST and SGST invoice, and that would be reflected in GSTR 2B showing a CGST and SGST of Delhi state. The place of supply is Delhi. But whereas the place of supply needs to be Tamil Nadu for claim of input tax credit. Such a transaction will be shown as ineligible in GSTR 2B, and that amount needs to be filled up in 4 Delhi 2. Needs to be filled in 4 Delhi 2. So whatever is ineligible ITC, which is automatically reflected in GSTR 2B, will be shown in 4 Delhi 2. So this is the change in the old and the new form GSTR 2B. But one very important aspect that is to be understood is, even though there is a change in the manner of filling GSTR 3B, there is no change in the legal provisions which entitle you the eligibility for claiming input tax credit. Input tax credit under GST is claimed based on the provisions of Section 16 of the CGST Act. The conditions contained in Section 16 continue as such, and therefore, one important point to understand is, whatever was the eligible ITC that you were arriving at before this new form GSTR 3B, the same amount should be arrived at in serial number 4C even after you fill in a modified manner. That is, there shall not be any assessee who shall be benefited or prejudicially affected because of this new form GSTR 3B. Leave alone the complaints aspect. The complaints reconciliation is different, but the amount of eligible ITC that will be reflected in table number 4C and transferred to the electronic credit ledger will remain exactly the same whether you fill in the old format or whether you fill in the new format. Just to illustrate with just to explain more with an illustration. So previously we had a total eligible ITC as 4,50,000 rupees. How did we arrive at? We said total ITC was 5 lakhs as per books. To be not reflected 50,000, 4,50,000 rupees claim and draw as ITC. we will show only 4,50,000 rupees in 3B. Now, you will start with total ITC as per 2B. This total ITC as per 2B will be shown in 4A5. That is all other ITC. Then the blocked credits, which is the permanent reversal, already reflected in GSTR 2B to the extent of, say, assuming 1,25,000 rupees, will be shown in 4 Bombay 1. Then there would be some transactions which are reflected in 2B, but the invoice is not received, the goods are not received. Then you will be showing it under temporary reversal. That amount would be reduced, and then the net amount which is called as net ITC available, which will be shown in 4C and transferred to the electronic credit ledger. So as you can note, the net ITC available in the old form of GSTR 3B and the new form of GSTR 3B will continue to be the same. So this is the most significant change which we wanted the trade and industry to understand and fill GSTR 3B very correctly, because whatever is filled in 4 Bombay 2 can only be added to 4A5. Also, it was a general mindset for the industry that ITC, what is claimed, that is in all other ITC, should be less than GSTR 2B. Even when there is a notice from the department, say for example, there is an ASMT 10 notice or there is a DRC 01A notice from the department, we will be comparing the total ITC in GSTR 2A or 2B with the total ITC claimed under all other ITC and explain the ITC totally claimed is lesser than what is reflected in 2B. But going forward, it has to be understood that the amount shown in all other ITC will only be equal to GSTR 2B or will at any time be higher. It will never be reduced. That is, the amount in all other ITC will never be reduced from what is reflected or auto-populated based on GSTR 2B. So this is the change that has happened. So what are the transactions which are to be shown as permanent reversal? So transactions to be shown as permanent reversal, number one, what I would say is with respect to credit notes which are reflected in GSTR 2B. See, these credit notes is not actually shown as a specific entry in the description column of this GSTR 2B, are not explained in the circular also. But there are any credit notes in GSTR 2B, you are obligated to reverse your input tax credit. Whenever it is a credit note, the supplier has reduced his output tax liability. When the supplier has reduced his output tax liability, then it is obligatory on the recipient to reverse his input tax credit. Such a permanent reversal shall be shown in permanent. Such a reversal shall be shown under permanent reversal. That is under 4 Bombay 1 of GSTR 3B. Then we have something called as Rule 48, which is claim of credit by a banking company or a financial institution. A banking company or a financial institution has a special provision to reverse 50% of the credit. So that is to be captured under Rule 38 under 4 Bombay 1. Then you have something under Rule 42 and Rule 43, which talks about common credit on input services or capital goods, which are used for both taxable and exempted supplies. So when an assessee is engaged in the supply of both taxable and exempted supplies, then there is a requirement of reversing that input tax credit to the extent of exempted supplies, which is provided for Rule 42 and 43. This Rule 42 and Rule 43 has utmost significance when we are discussing about the change in GST rates tomorrow. Say, for example, on a lot of food products, there has been a change in the GST rates, and then the Rule 42 and Rule 43 has to be very minutely understood. We would also discuss about this in day 3 of our discussion, wherein we have a very special focus on input tax credit. Then we talk about Section 17(5) blocked credits, just to highlight as to what are forming part of Section 17(5) blocked credits. Motor vehicles which are owned or hired, when a motor vehicle is for the transportation of goods, ITC is directly eligible. When a motor vehicle is for the transportation of passengers, you need to see whether it is for transporting greater than 13 passengers or less than 13 passengers. If it is for greater than 13 passengers, ITC becomes eligible. If it is for less than 13 passengers, you need to see whether it is used for making taxable supplies, used for making taxable supplies of further supply of such motor vehicles. Say for example, Apollo Auto, a car dealer, buys cars, also sells cars. They are eligible for input tax credit. They are used for making taxable supplies of transportation of passengers. Then they are eligible. For imparting training or driving school, then they are eligible. In all other situations, ITC is not eligible. So whenever a motor vehicle hired or owned is not eligible for ITC, then on such a motor vehicle, services of general insurance, repairing or maintenance is also not eligible. So this is one of the blocked credits. Then food and beverages is a blocked credit, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance, health insurance, membership of a club, health or fitness center, travel benefits extended to employees. So these are some of the blocked credits. We will have a very detailed discussion on the third day of this marathon series. But just to highlight as to what would form part of blocked credits. Works contract for construction of an immovable property, goods or services received for construction of an immovable property. So construction will only be if it is capitalized to the said immovable property. That is, it is taken to the balance sheet of. If it is taken as a revenue expenditure, then ITC would become eligible. Goods or services used for personal consumption. Goods lost, stolen, destroyed, written off, or given away by way of gift or free samples. So these are transactions which are treated as blocked credits and has to be shown as permanent reversal in GSTR 3B. So then, other than this input tax credit, there is also one more change in GSTR 3B. That is with respect to showing of outward supplies in respect of e-commerce transactions. So all details of outward supplies and reverse charge transactions are captured in 3.1 of GSTR 3 in table number 3.1. So all details we have been filling it up only 3.1. Now the heading of 3.1 has been modified to say transactions other than those to be shown in 3.1.1. So there is a separate table which is carved out for reporting transactions by an e-commerce operator or through an e-commerce operator. So 3.1.1 italic 1 captures the details which are made by an e-commerce operator. Say for example, a company like say Amazon, Flipkart, Myntra, which is an e-commerce operator, would show the transactions in 3.1.1 italic 1. Any company in Coimbatore or in any place which is supplying goods through an e-commerce operator. Say for example, you are a textile dealer, you are selling garments through Myntra, then instead of showing such transactions in serial number 3.1, which is the normal original table, going forward, the transactions have to be shown in the new table 3.1.1. That is, transactions made through an electronic commerce operator. Something which we need to understand is there is a very substantial difference of a transaction undertaken through an e-commerce operator and to an e-commerce operator. When a transaction is said to be done through an e-commerce operator, the billing would be directly done by the supplier to the customer and in the name of or facilitated by the e-commerce portal. Such transactions will be shown in GSTR 1, B2B or B2C as the case may be by showing the e-commerce GSTN number alone. E-commerce GSTN number is a specific field in GSTR 1. But whenever it is a supply to an e-commerce operator, then it will be treated as a regular outward supply. Moving forward, so far whatever we saw are the changes in GSTR 3B which has been notified and which is going to be implemented. Then there is also concept paper in GSTR 3B which proposes to bring upon more changes in GSTR 3B. We will just take a very quick look into what the concept paper is proposing to the trade and industry. We have already seen the details up to 4A5 and whatever is up to 4A5 remains to be the same. The ITC reclaimed, which was now added to 4A5. In this GSTR 3B, we explained that this 4A5 has to show the details of IT. You need to add the ITC eligible out of temporary reversal. That is ITC reclaimed. This ITC reclaimed was added to 4A5. Now, instead of showing that as 4A5, they are bringing a new field. They are proposing to bring in a new field as 4A6. And that will have 3 subclasses as ABC. This becomes even more transparent for the assessee and also for the department for better disclosure. So, on the ITC reversal aspect as well, the credit notes, which I already explained to you, has to be shown at a permanent reversal, gets a separate entry. Section 17.5, which is forming part of 4B1 in this proposed new form, in this new form now, gets a new field, and there are some more detailed breakup to be given of whatever the reconciliation that we already did. Otherwise, the substance still remains to be the same. But whereas there are some more very beneficial aspects for the assessees in this GST 3B. It is a very long pending demand of the trade and industry, including that of Codicia and SEMA, that GST 3B should be allowed to be amended. There was no provision, or there has been, or there still continues to be no provision for filing a revised GST 3B return at all. If any mistake has happened in any month in filing GST 3B, it shall be corrected in the forthcoming month. So, it was very difficult for the trade and industry to keep a track of that in the subsequent month. Now, there has been brought about, this proposed in the concept paper to bring about an amendment table with respect to outward supplies as well as amendment table for ITC claim and reversal. So, whatever is the correction that you make will be shown separately in the amendment table. Whatever is the correct ITC that you already do in this existing month will be shown in the normal tables as well. One more demand of the trade and industry that has been proposed to be taken care of in this concept paper is the negative values. Say, for example, in month 1, there is outward supply. In month 2, there is no outward supply, but there is only a credit note. Then what happens? Then such a then there is only a credit note which is to be issued. Then you cannot show such negative values at all in 3B. Now, this concept paper proposes to accept negative values, and whatever is the negative values will be carried forward to the next month of GST 3B. So, negative values brought forward will have a separate table in the concept paper proposed in GST 3B. When goods are returned as well. See, when goods are returned, say for example, there is a sale in 1 month. And then in the subsequent, you are showing it in GST 3B. Very well done. In the month 2, there is no sale, but there is only sales return. Then we are not able to show that sales return at all in 3B because that sales return alone will be a negative value which will not be accepted per se. Now, this negative value will be accepted, which will be a very big relief for the trade and industry. That is still in the concept paper. Trade and industry are requested to actively participate, give their feedback on this concept paper to the government so that these beneficial changes will also be brought in. Now we go upon to one more important aspect, which is about the interest calculation under GST. Interest under GST is demanded based on the provisions of Section 50. Section 50 has had a lot of beneficial amendments, but one very important aspect to note is Section 52 very clearly provides that the interest under subsection 1 shall be calculated in such manner as may be prescribed. So, it was very important that the GST rules provide the manner in which the interest has to be calculated. See, whenever the words prescribed is used in the Act, we need to refer to the rules. But there was no relevant rule for Section 50 at all for the manner of calculating interest. Government, having realized this lacuna in drafting, has now brought about Rule 88B, having a retrospective effect 1717. So now it is very clear that until yesterday, or until this change was brought about, until this Rule 88B was brought about, demand of interest was not actually right, but now it has all been set right by this retrospective amendment with effect from 1717. Demand of interest can be on 2 accounts. One is with respect to outward supply, or it is with respect to input tax credit. the reverse charge will also partake the same character of outward supply. So on an outward supply or with respect to input tax credit. With respect to outward supply, it could be subdivided into two different situations where the liability of outward supply was shown in the same return in GSTR 3B, or the liability was missed to be shown in this month GSTR 3B and shown in any subsequent month. Say a liability of this month shown in the same month GSTR 3B, but such GSTR 3B was filed belatedly. Say for example, for whatsoever reason, the GSTR 3B of July 2022 to be filed on the 20th of August 2022 is filed by an assessee only on the 30th of August 2022. 10 days of delay. The total outward supply made by such an assessee is to the extent of rupees 10 lakhs. The tax payable on total outward supply is 10 lakhs. The total input tax credit is 9 lakh rupees. The amount of cash to be paid by the assessee is rupees 1 lakh. In such a situation, when the return is filed belatedly by 10 days, then the interest would be applicable only on the cash portion, and the interest should be payable for the delay of 10 days. That is 1 lakh of rupees interest calculated at the rate of 18% for 10 days. That would be the calculation for interest. On the contrary, due to various reasons, whatsoever be the reason, the assessee misses to fill the value of outward supply in GSTR 2B at all. The value of GSTR 2B and the value of GSTR 3B outward supply is filled as nil. But whereas what is the value of total outward supply? 10 lakhs is the tax paid on outward supply. ITC is filled correctly 9 lakhs. 10 lakhs was missed to be shown. So this 10 lakhs will be shown only in the subsequent month. If this 10 lakhs is shown in the subsequent month, then interest will be on this entire gross amount. Even though that amount may be set off through ITC. So where any liability of any respective month is shown in the subsequent month only, that is, it is missed to be shown in the correct month, then interest should be applicable on the gross amount and not only on the amount paid by cash. This can be, it is not a general situation where an assessee completely misses to fill the value of outward supply. It can be a situation where, say for example, there is some credit in your P&L account, say for example, rental income collected. You have missed to show in your GSTR 3B at all. Such a liability is being taken into account at the time of March. Then interest will be paid on the gross amount, even though you had input tax credit on each of the months. Next is with respect to input tax credit. With respect to input tax credit, subsection 50 subsection 1 has a proviso which very clearly provides where input tax credit is wrongly availed, but input tax credit is not utilized, then interest is not applicable at all. So interest shall be applicable only when the input tax credit is wrongly availed and utilized. When is it said to be utilized? When the balance in the electronic credit ledger falls below the ITC wrongly availed. So I have claimed ineligible ITC without knowing on my purchase of car to the extent of rupees 1 lakh. I have claimed ITC, wrong ITC of 1 lakh. My closing ITC after the filing of return still continues to be 1 lakh or more than 1 lakh, then there is no demand of interest at all. I have utilized out of this rupees 1 lakh 30,000 rupees. So my closing ITC is only rupees 70,000. Then interest has to be paid to the extent of ITC wrongly utilized. That is to the extent of rupees 30,000. So then how do I calculate this interest? This interest has to be from the date of utilization, and as I already explained, interest shall be only on the amount, the extent to which the balance in the electronic credit ledger falls below the ITC wrongly availed. That is 1 lakh is the total ITC I have wrongly availed. Total closing ITC now is 70,000 rupees. 30,000 rupees is the ITC wrongly utilized. The amount of interest shall be only on 30,000. But what is the date of utilization? That has also been clearly provided for in the rules itself. The date of utilization where the amount of ITC falls below that 1 lakh amount, due to the filing of return. I have filed a return in any subsequent month, and because of which my ITC falls below that 1 lakh rupees. Then the interest shall be from the earlier of the due date of filing or the actual date of filing return. Say for example, the very same example for the month of July, I have filed the return not on the 20th of August, but on the 30th of August. So when I file the return on 30th of August, the due date of return is the 20th of August. So though I have utilized the ITC, only by offsetting the account, liability on 30th of August, interest will be applicable from 20th of August. So because I ought to have discharged my liability, I must have discharged my liability on the 20th of August. So even though I file it later, it is 20th of August. Or if I file a return earlier, say for example, on the 16th of August, I have filed my GST R3B. So I have utilized that ITC when on the 16th of August itself, then you have to reverse the interest, then you have to pay interest from the date of actual filing, right? Where it does not result, where the ITC gets lower, not because of return filing, but because of filing DRC03, then the date of such filing of DRC03. So from that date, you need to pay interest. Now we go into this third area of discussion for today's which is the GST on recovery or retention of amount on cancellation of contracts. This arises because of a very important and recent circular number 178, which has been issued on the 3rd of August 2022. The circular number 178 has had a very detailed deliberation with the practical illustrations on various types of transactions. So we would be discussing those illustrations and trying to understand which are the transactions which would become taxable per se. So why is this subject gaining a significance? When I have cancelled a contract, do I actually receive an amount? Or if at all I receive amount, what happens? So this entire discussion emanates because of an entry in Schedule 2 to the CGST Act. Schedule 2 to the CGST Act captures the details of activities or transactions which shall be, and it specifies which to be treated as supply of goods or a supply of services. Serial number 5E specifies that agreeing to the following shall be treated as a supply of services. Serial number 5 says the following shall be treated as supply of services, and under which we have subcategory E, which says that agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. If you really break this down and to understand, it says that agreeing to the obligation to refrain from an act, agreeing to the obligation to refrain from an act. I will not do this. I will not do this. I agree to it. To tolerate an act or a situation. I will tolerate something, and that is situation number 2. Or to do an act, or to actually do something, right? All these 3 situations are treated as supply of services. This circular says whether it will be treated as supply of services and what would fall under each of these categories. What would fall and what would not fall under each of these categories also. Whatever falls under these categories becomes taxable. Whatever does not fall under these categories becomes not taxable. First of this transaction could be a non-compete agreement. What is a non-compete agreement? One party specifically enters into an agreement with another party and says that I will not do this business in this geographical area, or I will not deal with these products, I will not do such services, and thereupon I get a consideration. Whether it is taxable? Yes, of course it is taxable, because it is agreeing to the obligation to refrain from an act. Agreeing to the obligation to refrain from an act. I will not do business in such an area. Sorry. The second situation is constructing only limited floors in a building. Say for example, in this specific area, I have the license to construct up to 6 floors. But when I construct up to 6 floors, it will disturb the sunlight of a nearby building. It will disturb the approach for a nearby building. Thereupon, though I have been permitted by the municipal authorities to do or construct up to 6 floors, I construct only up to 3 floors, or I construct only up to 4 floors. I do not construct the top 2 floors. And because of which I get a compensation from a nearby housing project. Yes, that is also taxable because it is agreeing to the obligation to refrain from an act. There is a manufacturing facility and thereby we have a nearby school also. The factory says that I will not run my machine or I will not run my factory during these specified hours when there is a prayer at school. And thereupon, the factory gets a compensation or an amount to refrain from an act. This is also taxable under the description agreeing to the obligation to refrain from an act. Then we have some transaction, then there could be a transaction where tolerating the use of common payment in the front of a shop. There is a business and in front of a shop and in front of the business, there is a small person who puts up a roadside shop. Tolerating that activity. It is not granting a license because it is a road, it is a payment, right? You cannot give it out on rent. If you give it out on rent, that is actually a supply per se. But he is using the space in front of your building on the pavement, and you are tolerating such an act. For tolerating such an act, if you get an amount as well, a consideration as well, it is also taxable because it is agreeing to the obligation to tolerate an act or a situation. Tolerating the use of loudspeakers in school. Say, for example, in the previous illustration, I told you that a manufacturing industry gets a compensation for not running the factory. Or it could be a situation where the school uses a loudspeaker and a nearby residential association is compensated for tolerating the loudspeaker. Then also it is a supply and it is taxable because it is agreeing to the obligation to tolerate an act or a situation. Then could be another situation where installation of zero emission or discharge plant. An industrial unit is well complied with the legal provisions, is well complied with the mandate as per law. But in addition to the mandate as per law, they are requested to install an additional plant to make sure that there is completely zero emission. The law provides for minimal discharge of wastage. To ensure that there is zero emission or zero discharge, then the industrial unit gets some consideration to ensure that there is no disturbance to the nearby residential welfare association. So the residential welfare association pays an amount, the residential welfare association pays an amount because of which, though it is not an obligation, he has agreed to the obligation to do an act. It is not an obligation to do, but he has agreed to the obligation to do an act. So that also becomes a supply under the provisions of the GST law. Right? So very important to understand what is the background, what is required for taxability. So what is required for taxability is there has to be a contract to do something or abstain from doing something. I will do or I will not do. It can be either of these things, but there has to be a contract. That needs to be two parties, and the first party has expressly or impliedly agrees to do or abstain from doing something, and the second party pays a consideration for it. See, because it is very, very clear now, very clear that there has to be consideration to be a supply. So when one party expressly or impliedly agrees to do, and the other party pays a consideration, then it becomes a supply. There has to be, then one more important thing is, there has to be a necessary and sufficient nexus between the supply and the consideration. Just because an amount is being received does not mean there is a nexus between supply and consideration. We will be discussing the immediately forthcoming slide as to some transactions where amount is being received, but it is not in relation to such supply, or there is no act or abstinence for doing something. So such agreement need not be such a separate agreement at all, but it can also be part of another agreement. So there is a principal agreement, and as a subsidiary to a principal agreement, there is also a corollary agreement. Then also it is fine. But to bring it within the ambit of taxability, there has to be a contract to do something or to abstain from doing something with two parties involved and a necessary nexus between the supply and the consideration. Now, we will be looking into some transactions where an amount is received which we may perceive to be as tolerating an act, but the circular has very beneficially and very clearly provided that it shall not tantamount to supply, does not amount to tolerating an act. Say, for example, liquidated damages for breach of a contract. There is a contract. A contract always provides for a damages clause. A damages clause to say that if I do this, fine. If I don't do this, then a penalty will be paid. When a property is damaged, all these situations are damage to property, negligence, piracy, and all these things could be, say, liquidated damages. So these liquidated damages are not, which are amounts received for tolerating an act, and this does not amount to supply, because the idea of entering into a contract is not to abstain from doing this. It's not to say tolerate the situation. The idea of entering into the contract is to do something, and thereupon though an amount is received, it does not amount to a supply at all. Say a penalty which is paid by the builder to a buyer for delayed construction. Building was promised to be completed within 3 years. Construction goes on up to 4.5 years. The penalty is being paid. It is not, though an amount is paid for tolerating act, it does not amount to supply. Forfeiture of earnest money by the seller in case of breach of agreement to sell an immovable property or any forfeiture of similar nature. Say an advance amount is received, 10 lakh rupees for, say, a transfer of a land. Total land value agreed was rupees 1 crore. The buyer did not fulfill the conditions, therefore the agreement is being forfeited. Since the agreement is being forfeited and the advance is not returned, does it become a supply? Does it fall under this ambit of tolerating an act? The circular has clarified that it does not tantamount to tolerating an act because there is no express contract between the seller and the buyer to say, I will abstain from doing this and you can take this 1 lakh, 10 lakh rupees. So it does not amount to a supply per se. Forfeiture of salary or payment of amount as per the employment bond for leaving the employment before the minimum agreed period. So this was always a very big question. That is notice pay salary. Notice pay salary, whether it is taxable under GST or not, whether it falls under this ambit of tolerating an act. There were very diversified opinions under the authority for advanced rulings. High courts giving in ruling in favor of the assessee in the pre-GST regime, that is under the service tax provisions. So each of this had very different diversified opinions, and now it has all been set to rest by this circular, which has provided that forfeiture of salary or payment of amount as per the employment bond does not amount to supply. Penalties under the Mining Act for excess stock found with the mining company, not a supply. Penalty for check dishonor is not a supply. These do not tantamount to tolerating an act. A couple of situations or transactions which would be considered as a composite supply when an amount is received. Number one, when interest, late payment fee, fine, penalty collected for delayed payment by the customers. When an amount is collected for delayed payment by the customers, then it partakes the character of composite supply and it has to be added along with the principal supply. Say, for example, interest or late fees collected for delayed payment of EB charges. So, delayed payment of EB charges, electricity charges is an exempted supply. Supply of electricity is supply of goods, which is an exempted goods. So, where interest or late payment fee is collected for delayed payment of EB charges, does it amount to a supply of services? Was a big question. Now it has been clarified that it takes the character of composite supply, and therefore the rate of tax applicable to the principal supply shall only be applicable. And to clarify that it still continues to be taxable. It is not outside the purview of GST, it continues to be taxable, but at the same rate which is applicable to the principal supply. So if your goods are taxable at 5% and you collect interest or late fee for delayed payment of consideration, the interest or late fee shall also be taxed only at the rate of 5%, not at the rate of 28%. Allowing cancellation and refund against payment of cancellation fee. This becomes a very little tricky situation where, say for example, you are booking some flight tickets, and say for example, you are booking some tickets on Make My Trip, Book My Show. A a cancellation is allowed. A cancellation facility is allowed, and for the cancellation, your the ticket or the make my trip company collect some fees. So such a cancellation fee and the balances amount is refunded. The cancellation fee which is collected is treated as a supply and it shall be subjected to GST. The cancellation fee is subjected to GST, right? So these are the most important aspects which we wanted to discuss on these three aspects, on these three topics. Now we can have a discussion on the question and answers post for the general audience.
I request you all to put forth your doubts in the chat box or raise your hands to get your queries answered. Thank you, sir, for sharing your knowledge.
Yes, Kamala, any questions, Kamala?
No. Hello.
So,
No,
yes.
Arvind.
okay, so yeah, unmute பண்ணிடலாம். So if you are not able to unmute also, you can let us know. Yes, sir, the presentation soft copy will be mailed, sir. So when are the changes in GST 3B to be effective from? We are expecting the changes in this July return itself. So the return to be filed in the month of August will be with the new format. So if a principal supply is exempted, what is the rate to be adopted? If the principal supply is exempted, then the composite, the entire transaction is exempted. Then the composite supply also is exempted. It does not fall to be taxable. Composite supply alone falling to be taxable, yes, of course, that is okay. Composite supply alone is taxable. You did not examine the composite supply individually. It has to be seen only together.
Sir, anyone can raise the voice also, sir. Now everybody has been unmuted. So if anyone, they can ask the questions.
Sir, this is Jashmon, sir.
Yes.
My doubt is actually our credit invoice has been raised in previous month, which is from April to June, which we are accounting in July. Some it may accumulate in our GST 3B credit, but in ITC, as you said in DF4E, it will not populate 4.1 because since it's automatically populated in April, May, and June, so which is get accumulated in current month. So that as you said, it is previous month accumulation we are carrying forward. Since this option has been not done previous month, so now how it could be treated in current month?
Yes, sir. Sir, the question is with respect to the transitional change between this old method which has been adopted for filing GST 3B and the new method.
Okay.
So yes, of course, there will be a transitional challenge where we will have to maintain the details of ITC which we are pending to be claimed and keep a list, and out of that you can add it, the new form. So the most beautiful aspect of GST 3B is that it will allow any amount to be filled. It will allow any amount to be added. It will allow any amount to be reduced. So it is allowed, and it is allowed as per the provisions of law also. So whatever is the ITC, even with respect to the entire financial year of 21-22, it can be claimed before the 30th of November. And as you rightly said, any transaction between the months of April, May, June also can be added now in the month of July to 4A5, all other ITC.
Okay. Then one more doubt, sir. So the debit notes and credit notes which you are raising on our suppliers, actually supplier has to raise the debit note or credit note against their supplies. But in some case, due to rejection or due to price variation, we are raising debit notes and we are asking our supplier to account our debit notes as a credit note in their books. So some of them are submitting immediately, some of them are filing delay. However, we are going to reverse in a specific same month. So
Yes, sir.
whether this can be made in same month, or we should be wait until their credit note auto populating in our GST 2B.
Yes, sir. So this would be very important that the supplier also raises a credit note almost in the same month, sir, to ensure that there is no difference between what is as per books and what is reflected in as per GST 2B. See, when it is being verified by the department at any later point in time, or it is explained to any GST auditor as a consultant as well, it would be important to take care of both the books and GST 2B. You need to prove that whatever is the debit note shown in your books, you have reversed the ITC in GST 2B, and you also need to ensure that whatever is shown as credit notes in GST 2B is also reversed. Yes.
In some case, our supplier has not accounted in previous month or current month is going to account in subsequent month. Then how would be the treatment?
So only thing is we need to have the evidence that we have already reversed, sir. Otherwise, it is fine, sir. We need to have the evidence that we have already reversed. See, the challenge will come only after this new concept paper has been introduced. After this concept paper has, after the new GST 3B as per the concept paper is introduced, then there will be a challenge because this credit note will be auto-populated. The value of credit notes on account of credit notes in respect of inward supply. See, as you can see in the screen now, sir, are you able to see my screen now actually?
Yes, sir. Yes, sir.
Yes, sir. So this 4B3 on account of credit notes in respect of inward supplies is auto-populated. This auto-populated figure becomes a challenge because you will be reducing this auto-populated figure in the forthcoming month, but increasing the credit notes in any other preceding month.
Correct. Correct.
You need to maintain a reconciliation, sir.
Okay. So I think this is very difficult since the credit notes and supplies is very easy. Whether inward and outward, it will be easy. But the accounting of credit note, debit notes, we face very difficulty in GST 2B and our books.
Yes, sir. That is why this concept paper is now open for feedback from the trade and industry. So that is why we also brought this concept paper into discussion. So it is right that as the trade and industry, the trade and industrial associations and also the various companies per se raise it up to the respective email so that it shall be taken due note by the GST Council before the new GST 3B is notified.
Yes, sir. Thank you, sir.
Yes, sir. Sir, whether GST 3B figures will be auto-populated and it will be frozen? No, sir. It will not be frozen, sir. We will be able to edit it, sir. So that continues. The good aspects of GST 3B continues that even though whatever figure is auto-populated, you will be allowed to change such values in GST 2B.
Hello, sir. Good evening.
Yes, sir. Good evening, sir.
Sir, I need help for clarifying of GST ITC claiming. If some parties of last year ITC is not credited, I mean our GST 2B, regardless the party was supposed not filed of, preceding year. So when we will, credit taken of eligible ITC before September, or it is eligible or ineligible?
It is eligible, sir. So, sir, I will repeat the question for lack of better understanding. Okay. So, thing is, supplier has filed GST R1 belatedly, and thereupon the invoices of the preceding year, financial year 21-22, is now getting reflected in GST R2B. Can he claim an ITC before September? Just to add to say that very important aspect is now the restriction is not with respect to the due date of September or the date of filing the return of September, but it is up to the 30th of November. So you can claim ITC before 30th of November, number one. Number two, that ITC is eligible to be claimed and no doubt about it.
Okay, sir. Sir, if suppose the party was caused of 1 year, but we taken up September 30th, it means a tax audit under process. So it's treated as 21-22.
Can you repeat the question, sir?
The party was not filed, crossed 1 year, 1 year crossed. So before the filing of tax audit, the same reconciliation, it's to be effective for the end of September month. It is eligible for filing September 2022.
Okay, sir, you just mail us this question, sir. You just mail us this question, sir. We will definitely revert to you, sir.
Yeah, okay, sir. Thank you for your support.
Please, sir. Please, sir.
Trianam, sir. Trianam, sir.
Hello. Hello.
Yes, sir.
Sir, Selvakumar from Unicorn Engineers, sir.
Yes, sir.
Yes, sir.
Actually, we are having a customer last year, sir, 4 or 5 orders. The time we are invites, sir. Actually, our order value is around 1 crore means.
The Tamil கூட கேளுங்க sir. சொல்லுங்க
Sir,
Order 1 crore. Yes, sir.
சார் எங்களுக்கு ஒரு மல்டிபிள் ஆர்டர்ஸ் இருக்கு ஒரு கஸ்டமர் இருந்தது கஸ்டமர் கூட. அந்த கஸ்டமர் கூட அப்படி இருக்கும்போது சார் இன்வாய்சிங் பண்ணும்போது நிறைய ஆர்டர்ஸ் வரும்போது 1 lakh 1 crore 10 lakhsக்கு பில் ஆயிடுச்சுங்க சார். இப்போ ஃபைனலு கஸ்டமருக்கு எங்களுக்கும் ரீகன்சிலேஷன் பண்ணும்போது இப்போதான் லாஸ்ட் மந்த் ஃபைன் பண்ணியிருந்தோங்க சார். அந்த வேல்யூ வந்து ஹையர் சைடில் இருக்குன்னு சொல்லிட்டு இப்போ அந்த கஸ்டமர் சைட்ல இருந்து கிரெடிட் நோட் கொடுக்க மாட்டாங்க. இப்போ நாங்களே அந்த இன்வாய்ஸ் ரிவைஸ் பண்ணிடலாங்க.
சப்ளையர் நீங்க தான் சார் கிரெடிட் நோட் கொடுக்கணும் சார். சப்ளையர் நீங்க தான் சார் கிரெடிட் நோட் போடணும் சார். நீங்க தான் சார் சப்ளையர். நீங்க தான் சார் கிரெடிட் நோட் போடணும்.
இப்போ நாங்களே போட்டு அதை ரிவைஸ் பண்ணிக்கலாங்களா சார்?
நீங்களே பண்ணிக்கலாம் சார்.
இப்போ 1 year ஆயிடுச்சுங்க சார். லாஸ்ட் அக்டோபர் சாரி லாஸ்ட் ஆகஸ்ட்ல பண்ணது.
ஃபினான்ஷியல் இயர் 21-22 ஓட டிரான்சாக்ஷன்ஸ் வந்து பிஃபோர் 30th of November நீங்க பண்ணிக்கலாம் சார். எனி GST ஆர் நீங்க பண்ணிக்கலாம் சார்.
ஓகேங்க. நாங்களே பண்ணி ஐடிசி ரிவர்ஸ் பண்ணிடலாம் இல்லைங்களா சார்?
பண்ணிக்கலாம் சார்.
ஓகே தேங்க் யூ சார்.
ஓகே சார்.
சார் சார் இப்ப பேசணும்னு சொன்னீங்களா சார்?
என்ன சார்?
என்கிட்ட பேசணும்னு சொன்னீங்களா?
எஸ் சார். இல்ல சார், திருங்கணும் சார். எஸ் சார். சார் க்ளோசிங் ரிமார்க்ஸ் சார். அவ்வளவுதான் சார்.
Thank you very much for attending today's meeting. And I think the session would have gone very well.
Yes, sir.
I just left for another meeting, sir.
Sir, no problem, sir. Thanks, sir.
So once again, I request everyone to participate in other meetings coming in the forthcoming all the 4 days. Thank you very much from Odisha side, sir. Thank you very much.
Thank you, sir.
Thank you.
Okay, thank you.
Thank you all for joining us today and making the day 1 of a 5 days GST marathon session a great success. We invite you to take part in the remaining sessions also. In case there is any doubts that need to be clarified, kindly mail to us. We will revert back to you. Thank you once again.
Thank you.
Thank you.